Okay, hello and good morning, everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today is the 4th of February 2019. So, welcome everyone. Welcome to this Monday's morning session where we're going to have a look at the markets, a few charts, as always. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, guys, so let's quickly jump into the charts. Now the first one I want to touch on here is the Nikkei 225 index. So the Japanese index here, you can see that continues to travel higher today. It already kind of ended up the day with the positive candle, so putting itself not far from this downside resistance line taken from the highs of the 2nd of October last year. So in a way, still there is some potential to move higher. We could still see a test of this downside resistance line. Certainly, first you can see that there is a good potential area of resistance near the 20,972 level, 75, something like that. You can see it also coincides here with the 50 EMA here shown as the red line on the daily chart. So in a way, this is what we're looking out for. For now, probably we're just going to remain somewhat more neutral, because if this, let's say, holds, if this continues to hold, then we could see the bears jumping in again and potentially driving this index back down towards some key areas of support, which I'll cover shortly. But for now, like I said, guys, keep an eye on this downside resistance line, especially keep an eye on this resistance line here near the 50 EMA, which is around approximately around the 20,975, 70, something like that, in between there, that area. So in a way, what you could do here is wait for a nice good potential break here above this downside resistance line, and for a better confirmation, in a way, wait until this gets above the 21,340 level, and this way you could then target much higher levels in the long run, or should I say longer run, maybe in the near term, I would say even. So in a way, that's why, like I said, for those who are more on the cautious side, you could in a way wait until we get a nice pop above the 21,340 level. This way we could then target the 200 EMA, or even slightly above that, the 21,875 zone, which is marked here by the highs of the 13th of December and the highs of the 16th of November. So keep an eye on that one. Certainly, like I said, for now it's a very tricky one, but at the same time very interesting, and it's going to be very interesting to see what it wants to do with this downside resistance line, because if it continues to hold, now this is where more bears could enjoy the moment, and we could see more of them jumping in here and potentially driving this one lower. So in a way, you could, from the very short-term perspective, you could keep a close eye on this little potential area of support just as a gauge here. Just let me put that on the chart. So this is what I'm talking about here. So the level around the 20,720 zone, a nice good drop below this could potentially lead towards a test of this key area of support near the 20,345 level. And you can see that in the past it acted as a very nice area of support, both support and resistance. So quite an important level becomes that one, the 20,345 level, but only if we're going to get a nice drop below the 20,720 zone. So keep your eyes on that one. Let's see how this plays out. But at the moment, like I said, probably we're going to remain somewhat a bit more on the neutral side, just going to continue observing what he wants to do with this downside resistance line. If it wants to break it to the upside, that's wonderful for the bulls. We could see some more upside here, but if it continues to hold, well, I mean, we could see maybe the bears picking up the game again. So let's see what's going to happen here. let's see how this plays out. And yep, keep an eye on the price action, guys. Jumping into gold now. Gold is selling off from last week's highs here. We've managed to reach the 1326 level. Now, in one of my videos previously, I was talking about this level, guys, and we managed to reach that perfectly here. The 1326 level marked here by the highs of the 11th of May. So the high of the 11th of May worked out nicely here, and you can see that the bears stepped in here, and now they're driving the commodity lower, and now they're driving the commodity below the 1316 level. So certainly this of course creates this opportunity for the bears to kind of push the this precious metal further down. The next level that we're going to be keeping a close eye on is the 1308 level, approximately there, but slightly below that we do have this 1297 zone, so 1297 and a half, something like that, marked here by the lows of the the low of the 28th of January. Certainly don't forget about this upside support line as well. It's running here. It previously acted as a very nice area of support, so we could see maybe a retest of that as well if this precious metal continues dropping here below the 1308 level. We could, like I said, then target these, of course, the psychological 1300, but slightly below that we do have the 1297 level, so keep your eyes on that one. Very interesting. Let's see if this actually upside line gets tested again. If the 1308 level continues to hold, and if gold struggles to kind of drop below it, we could see maybe a nice potential rebound here. And if this decides to push back above the 1316 level and we could then aim for the last week's highs near the 1326 level. So keep an eye on that one. But guys, for now, certainly the 1308 is the level to watch for now. Let's see how it plays out near that area. If it proves to be a very strong area of support, that's wonderful for the bulls. We could see them jumping in again, but again, for to be more on the safe side, let's put it that way, and to be more on the cautious side, we would probably wait until this gets above the 1316 level again, and then we will aim for higher levels. For now it's shifting from the very short-term perspective. It seems that he wants to shift further down, but again, let's see what he wants to do with this 1308 level. Jumping into WTI now, looking at this one, and let me just jump into a 4-hour chart on this one, guys. So basically we're having a nice pop above this area of resistance here, approximately there. So currently today it's already trading above the pivot, which is a bit of a positive sign for this one. So in a way, this increases the chances of seeing WTI traveling further up here towards the R1, which is around the 56.15 level, approximately there. But if that fails to kind of withstand the bull pressure, then further acceleration to the upside here of the price could be possible, and we could see maybe a test of the R2, which is around the 57 level, approximately there. Slightly above that we do have the 57.50 mark, and just to kind of show you what that was in the past here, you can see that it was acted a nice area of resistance here back on the 19th of November. So keep your eyes on that one, guys. We could see maybe a possible test of that, but again, only if we're going to remain above the pivot. If we're going to start aiming for targeting the R1, and we're going to get closer to it, and then yeah, we could then like I said, target the 57 and the 57.50 levels. On the downside, well, it's a bit of a tricky one, of course. Certainly if this reverses sharply back down and drops below the 54.60 level, certainly this is when we will target the next potential area of support here, seen near the 53.95 level, approximately there. But just slightly below that we do have the 53.30, which was marked here by the lows of 1st of February. So a nice good drop below the 53.30 level. This is when it could turn out to be quite ugly for the bulls, and we could see this one sliding further down. And what we're going to target here is this little area around the 51.30 zone, so marked here by the lows of 28th of January. So keep your eyes on that one, guys. So for now, long story short, basically keep your eyes on a few levels. In a way, for the upside from the very short-term perspective, guys, for today especially, you could keep an eye on the 55.55 zone, approximately there. A nice good pop above the 55.55 could open the path towards those higher levels. On the downside, a drop below the pivot and a drop below the 54.60 level. This could turn out quite ugly for WTI, but for a better confirmation of the downsides, probably we'd like to see a drop below the 53.30 zone right here, and then we will target much lower levels. So for now, even though it's stuck here, it still remains somewhat more to the positive side, somewhat more to the bullish side, especially given the fact that we're already trading above the pivot today. And if we manage to clear out this 55.55 level, yep, this could continue traveling further up, guys. So keep your eyes on that one. Jumping into USDJPY now, let me just jump into a daily first on this one. So you can see that last week basically the pair was trading here in between these two levels, 109.10 on the downside, and on the upside the 110 zone. So last week it managed to break it to the downside, travel lower, but found good support near the 108.50 zone. So from which it reversed back up, and on Friday we saw this this pair traveling back inside this little range that it was trading in prior to that break, and now it seems that it's aiming for the 110 level. So it's already not far from there. It's only about 23 pips, something like that, away from testing the psychological 110. So but this is basically what we're going to be keeping a close eye on. A nice good pop above this 110 level could confirm a forthcoming higher high, and we could then target higher levels like 110.880, of course the 200 EMA itself, and the next but stronger area of potential resistance could be seen at around 111.45 zone. So marked not far from the highs of the 26th of December. So keep your eyes on that one, guys. Very interesting pair. But first, like I said, let's see what it wants to do with the 110 zone. Excuse me, my voice is a little bit going down today. So last pair for the session for my traders Espresso, and that's the euro dollar. So euro dollar, a bit of annoying trading last Friday during the NFPs here. So it was a bit of a volatile one, and to be honest, it was up and down, but still managed to close the day in the positive territory, and as well close the week in the positive territory. So but today you can see it already. It's kind of it opened below the 100 EMA here, shown on the daily chart, and now it seems that it's shifting lower. It's at least it's trying to push lower. Still overall we can see that we're still above this upside support line taken from the lows of November. I do understand the fact that it was broken here back in January, in the end of January, but still, for example, you can see that how narrow, or let's put it that way, it's a range trader's paradise right now here on your euro dollar. Basically what you could keep an eye on here is for now be very cautious. It seems that it wants to travel lower again, but for that we would need to see a nice good drop below the 1.1433 zone. So only then we'll start looking at lower levels, like a possible test of the 114 level itself again. But if that fails to withhold the rate from dropping lower, then yep, a test of this upside support line again could be possible. Could be, we're still not excluding that option. But again, like I said, for that downside, we would need to see a nice good drop below the 114.33 area, approximately there. Let me just quickly put an arrow here, guys, for our future reference. So in a way, this is what we could be looking at. Of course, initially targeting the 114 level itself, but if that fails, then yeah, we could see a drop and a test of this upside support line. For now, we're going to remain somewhat more on the neutral side. We're just going to continue observing some of the key levels and wait for that possible break on the upside here. Certainly this travels back above the pivot here, and that pivot is around the 114.60 level. So if we do get a nice push above the 114.60, this could lead towards a test of the 114.85 zone, which is around the R1, but let's say the much better area of potential resistance that we will be keeping a close eye on will be the 115.15 level. So you can see a little marked by last week's highs. So So guys, keep an eye on this one. Very interesting developments here. And for now, from the very short-term perspective, the 114.33 level on the downside, that's what we're keeping a close eye on. Let me just get rid of this level here. It's a bit in the way. And on the upside, of course, the push above the 114.60 could potentially make the bears worry again, but a nice good push above the 114.85. This is what we will be looking for a better confirmation of potential move higher. And of course, if this moves above the 115.15 level, then this could potentially confirm a forthcoming higher high, and we could then target the 115.70 level marked here by the highs of the 10th of January. Okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me later on with my traders tea time, and that's 14:15 GMT time. But for now, I hope you have a fantastic Monday, and it's a fantastic trading day for today. And yeah, I'll see you later. Bye bye.